Now I'm discussing about what are loans and how do they work. Need to make a big purchase, but don't have liquid cash to cover the entire cost. Whether you are for a car, a new home, school tuition, or something else, a loan helps you get the extra money you need while allowing you to pay it back over time. But different loans exist for different purposes and have different provisions, so it might not always be clear which type you need. While borrowing any amount of money can be intimidating, when done correctly, it can help boost your overall financial health and even your net worth over time. But it's important to start at the beginning to help you navigate the world of lending. We are breaking down some loan basic, from the different types of loans to how a lender determines the interest rate you pay. Think of this as you go to guide to the fundamentals of lending. Now I'm talking about what are they and how they work. A loan is an amount of money you borrow from a bank, financial institution, online lender, or even a person such as family member. Over time, you pay this money back, usually with interest. I'm talking about loan. A loan is an amount of money. A loan is an amount of money an amount of money of money uh, of money you borrow from a bank, financial institution. You borrow from a bank, financial institution, or even a person such as a family member, or even a person such as family member, Over time, you pay this money with interest. Over time, you pay this money with interest. Now you can say that extra money you give to the lender on top of the original loan amount for the privilege of borrowing the money. While there is a wide variety of loans, almost all the similar attribute. Almost all loans, for example, have a due date by which you need to pay them back. This is called the loan's terms. All loans then have payments you need to make on a set schedule or a lump sum. This is how you can repay the lender. People take out loans to pay for college, cars, homes, medical procedures, and even to fund business. The other thing is that how do you pay for loans, interest terms, and payments? Explained it. Before applying for a loan of any kind, you will want to know exactly how you are paying for the loan. This is where your payment terms, interest rate, and due date come into play. To start, you will always need to pay back the principal of the loan. This is the amount of money you are originally borrowed. As a teenager, let's say you borrowed money from your grandma to buy your first car. She may loan you $2,000 interest free because she is your grandma. In this case, you only owe her the $2,000 you borrowed. You also may want to throw in a few extra Sunday dinners in this scenario. You can say that before applying for a loan of any kind, before applying the loan of any kind, you will want to know exactly you will want to know exactly uh, how you are paying for the loan. How you are paying for the loan.